minute, and then we're gonna get started. What's going on, bro? Hope everybody having a good weekend, man. I'm feeling good today. I don't know why. I just woke up just smiling. I ain't gonna lie, but I'm gonna just wait one more minute before I get started. But yeah, I was getting quite a few questions this week, so I definitely want to answer those questions. I'm gonna talk briefly about the VIX, and then anybody had any questions on the homework, then we can go through that. But I got some examples of the questions that I want to answer before we get off of this. So all right, let's just get started. All right, so I got three major questions that I was getting this week in the Discord. Some people was asking, okay, how can I avoid fake outs? I'm gonna answer that. Then I'm gonna answer 5 minutes. Somebody said that the 5 minute is too fast. And I'm like, okay, maybe you need to go up a time frame. And how do I get a better RR? I talked about this before, but I feel like we just need to keep going over it because I mean, the 5 minute is cool. Like finding like the little supply and demand or like the little liquidity graph setups on the 5 minute is cool. But most of the time, it may not go to a bigger RR. Like the runners, like that's not going to be common unless you use the higher time frame. So I'm going to be showing y'all examples of the 15 minute, mixing the 15 minute with the 5 minute, because that just seems like it works the best. I mean, you can use the 1 hour with the 5 minute, but just know it's going to be some type of, I don't want to say a manipulation, but if you try to get in exactly at the break of the 5 minute candle off of a 1 hour setup, you may lose before you win, and we don't want that. So let's just get into it. So the VIX, I don't use as much, but basically I look at the VIX as far as market structure. So if I see the VIX is going up, and basically if I no, let me say that again. If I see NAS is throwing a good setup, like this setup right here, let me zoom in. If I see NAS throwing a good setup right here, which is clearly a supply setup, I need to be seeing the VIX doing something similar to that, or it may not even look exactly like this, but it needs to be doing the opposite. So for this situation right here, it's not going to always look like this, because like just like the DXY for forex pairs, you kind of can see like the opposite, like it could be demand on EU and then supply on the DXY. But when it comes to the VIX, it's not going to always be like that because there's so many gaps when it comes to the VIX. It's not going to be clean at all. It's not going to make sense. So when I look at the VIX, if I'm taking a NAS setup, I just want to see if the candles are printing the opposite. So right here, this will clearly be our sell right here. We'll be selling right there. But this is not going to happen every single time. So all I'm looking for is just opposite candles to be printing. So basically like these type of candles need to be printing at the same time as this candle is printing. So I'm just basically looking at market structure on the VIX. The VIX is basically, if people don't know what the VIX is, basically it's like a fear meter. As the VIX is going higher, people are getting nervous. Okay. And if the VIX is dropping, people are like calm. We're not really tripping about the market. So that's really what the VIX is for. So if you see like the VIX is shooting up really hard, NAS is going to drop. And we know like when it comes to NAS, we don't want it to be dropping. Majority of us win the most when it's going up, but when it's dropping, I mean, that's not really normal when it comes to indices. So that's why when VIX is going up, people are getting nervous. Like people are like pulling out of their trades, etc. So I just want to talk briefly about that because you can use the VIX. Yeah, the VIX is exactly the VIX is on pair, but you can use it as far as indices. I just look at it as far as NAS. It definitely move opposite of SPX too, but again, it's not needed. But if you want to see like, am I going in the right direction? Just glance at the VIX, see if it's dropping. Then NAS should be going up, and vice versa. So yeah, let's get into this better RR because a lot of people are like, okay, I like the 1-on-ones, but like I need better. You said, what the fuck is GJ on your chart? Hey, this is for the example. I don't trade GJ. You said which VIX? Which VIX? Oh my bad, I didn't click that wrong. Let me go to right. I think it's the VIX. No, it's not VIX 75. No, it's not that. I believe it's the TVC. Do yours say TVC? You said GJ coming back. No, it's not, bro. It's not. I think it should say TVC, or I think you can use this one. No, it's not that one. Yeah, I think this one's the TVC one. But no, I got an example on GJ, so y'all can chill, bro. Y'all can chill for sure. Y'all can chill. But let's get into this. So the 15 minute, and the 5 minute, you can use those together to get a better RR. So I'm gonna go through some setups. Yeah, let's go to GJ since y'all talking mess about GJ. So when it comes to seeing high probability supply and demand on the 15-minute chart, understand you may not see a 5-minute demand inside of that 15-minute. Understand that. So just because it's reaching a 15-minute demand does not mean it's going to be a 5-minute inside of it. It just depends on if there gaps in the 5-minute. So if I'm looking at this setup right here, I clearly see that we got a demand down here, right here, right there. So I'm gonna fast forward. Now it reaches the zone. Now you can just trade the 15-minute chart if you want to, and that could be your entry right there. This can literally be your entry right there. I'm not gonna lie, it can literally be that simple. But if you want the higher RR, go to the time frame down. So let me show you exactly where we would get in at if we got in at the 15-minute. We would get in right there. Like that would be our trigger boom. We're getting in the buy. But if we go to the 5-minute, and we zoom in at our zone, we'll be getting in a little bit lower. We'll be getting in like right here. We'll be getting like right here. Now, I'd rather get in on the 5-minute than get in on the 15. Now, nothing wrong with trading just the 15-minute chart, but it's all pros and cons to the 15-minute chart. It's going to be less fake outs, less setups, but most of the time they're going to hit cleanly. You're not going to be stressing if it's going to come back and get you, because the 5-minute, we get sniper entries, but we can be faked out a lot. Like no cap, we can get faked out a lot. So if you want to avoid getting faked out, trade the 15-minute chart. And then once you see a high probability supply and demand on the 15-minute chart, go down to the 5. Go down to the 5. Now in this situation right here, if I would take this trade at this break of the candle right there, I would definitely give it some breathing room, because it's not going to be as beautiful as this all the time. It's going to fluctuate a little bit, and then it's going to go in your favor. So that line, that long line is the 15-minute entry, and then this one right here will be the 5-minute entry. So it just depends on if you want to scale down. If you, like I said, if you want to avoid fake outs, go to the 15-minute chart. Go to the 15-minute chart. And let me see how much RR did you just increase off of just the break of the candle on the 5-minute. Take this stuff off right here. Okay, so this will be the break of the candle, and then you would have gave it a little bit of breathing room, like something like that. That's cool. And then easy little 1-to-1, and then you could leave a runner to this liquidity or whatever. But again, if you would have got in on the 15, you see where you would have got in at. If you would have got in on the 15, it would have been way higher. You would get out right here. Now you got a 15 pip stop loss. Ain't nothing wrong with that, because that's GJ. But you could have got in down here though and had a 10 pip stop loss. You know what I'm saying? So that's what I really want to talk about today, because a lot of people are like, man, these 1-on-1s not working. If 1-on-1's not working, you got to be patient enough to wait for the 15-minute setups to happen. Those aren't going to happen every single day. Like no cap, they're not going to happen every single day. That's why I trade the 5-minute. But I may start calling setups on the 15-minute chart, but are y'all going to be patient enough to wait? Because this is actually 45 minutes worth of just waiting. A lot of people just got stuff to do in the morning, you know what I'm saying? So we're not trying to wait. But if you're taking 15-minute setups, you're going to be in that trade for a little minute. It's not going to be just a quick 20 minutes, boom, we're done. Like, no, it's not going to be like that. Let me see. I got another setup on Euro USD. Okay, so this is on the 15-minute chart. Now, there's 2 gaps on these 2 candles right here. Now, I talked about this on my previous webinar, but you definitely want to draw the box around both of those candles, because we don't know which one is going to stop at. I wouldn't mind waiting on a high probability. Yeah, I mean, it just depends, because, I mean, if you trade, the more you come to the market, the more you're at risk. I'm not saying you're not going to be profitable, but if you wait for those high probability, higher time frame setups, you're going to have a better RR off rip. That's just how it is when it comes to trading. Trading is not really meant for you to trade every single day. Like, it's really not meant like that. But people just want to, I don't know, like people just think this is like a 9 to 5, and it's really not. Like, you don't even need to trade all week. You really don't. But okay, so right here, this is a 15-minute demand, and I drew that line across that last down kind of before the big move in case it stops at that level. We don't know which level it's going to stop at. We're just waiting. So it gets to the zone. Now, this situation right here, I'm not waiting for a 15-minute break. That doesn't make sense. If I wait for a 15-minute break, that literally makes 0 sense. I'm not gonna do that. Let me see what candle prints. Okay. Now this candle right here, this green one, that's decent because this is Euro USD. This is a slow pair. This is not gonna be a lot. What is this? 16 pips on. Well, that is kind of a lot for Euro USD. But me personally, I'm gonna scale down. I'm gonna rewind. I'm gonna scale down to the 5-minute, and I'm gonna see if it gives me a good candlestick break or something like that. Now, when it comes to the 5-minute, it depends on if you want to make the zone a little bit smaller. But I'm just basing this off of if you want to use the 15-minute demand and just answer off of 5-minute breaks. Okay, so let me fast forward. Okay, we get a down up candle, and then that will be your break. Now, if I personally would take this trade right here, let me do this right here. Okay, I'm going to give it some breathing room. Like when it comes to trading different time frames, if I'm entering on the 5-minute, I gotta give it some breathing room because it's not going to be just a sniper entry then reverse. Like it may play around a little bit. So I'm going to give it a little bit of room right here. Maybe even on that line right there. And then I'm going to fast forward and then first TP hit. Now let's see where the 15-minute entry would have been at. You would have got in way much higher. Now that's the 5-minute entry. Let me drag this the 5-minute entry right here. If you would have just traded strictly the 15-minute, this would have definitely been a big ass stop loss. That don't even make sense. You know what I'm saying? So how do you know how far breathing room? If it's like Euro USD, I do maybe like 3 to 5 pips if I'm on the 5-minute. If GJ, maybe like an extra 5 to 7 pips. You kind of got to gauge it. I don't really have like a set pip amount. Like, okay, if it's if it's like NAS 100, let's do 10 pips or something. Like I just give it just enough room where I think that if it goes down there, then I was just a loser. I don't really have a set like pip amount far as like giving this a breathing room. Like we can't really gauge that, honestly. You can check the ATR for that. I mean, if you want to drop some gems with ATR, listen, I don't do ATR. But right here, you would have got in for the buy right here. You would have got in for a buy right here on the 5-minute, but if you would have waited and just strictly trade the 15-minute chart, you would have got in all the way up here. Now, that's why I said, like, just wait for the 15-minute subs to happen, and then you would get in on a better entry, and your RR would be way, way better. I got another one. So let me see. October. We just did GJ. We can close this out. Okay. All right. So right here. So we're on a 15-minute chart. Now this is NAS 100. This is the 15-minute chart. Basically breathing room, enough room to give a potential to wick below or above. Correct. Okay, so this is the 15-minute chart. All right. Now, with the 15-minute chart, it's going to be scenarios where they're not going to give you a good 15-minute candle to enter off of. So right here, we got 2 setups happening at the same time. We got a supply happening right there with a gap on it. Okay. And then we have a gap down here, but I'm just going to draw this up just like this. And then we're just going to wait. So right here, it touches into the supply right here. Now, some people use sell limits when it comes to 15-minute supply and demand. I'm just not preaching sell limits or buy limits. Some of y'all can trade that if y'all want to, but I don't want to really preach it because, again, if you sell right there at the low of this green candle right here and it blasts up, you instantly lose. Your money gets gone, and then it's just like, damn, okay, what's next? Let's look for the next setup. So I just wait for extra confirmation. Now, let's say on this scenario right here, we go to the 5-minute. Now, look what happens on a 5-minute. You probably lost. This would have been a sale. Your stop loss would have been right here. Fast forward, boom, you would have lost. That's why I said if you're trying to trade the 15-minute supply and demand, you got to get your stop loss some breathing room because it's going to play around a little bit. This could have been a win if you would have just simply traded the 15-minute chart. You get what I'm saying? So like right here, the 15-minute chart is going to filter out all the fake outs. So if you would have took this supply setup right here, this would have just been a sale. You would have just won. Boom. That would have just been a dub. End of the day, end of the discussion. If you would have went to the 5-minute and you would have sold right here and your stop loss would have been above that wick, it would have wicked you out and then you would have won. It's like, okay, damn, I can't just get a winning trade without losing, like that's irritating. You know what I'm saying? So that's why I said the 15-minute chart is going to filter out the fake out move. The 5-minute can definitely be noisy, like no cap. It can be very noisy. So if you want to filter out those fake outs, definitely go to the 15-minute chart. But let's take this off because this could have been a win if you would have took it off the 15-minute chart. So right here, this is a demand area right here. This is a demand. All we're doing is waiting. Now, actually, we're not waiting. We're going to the 5-minute. We're not waiting. We're going to the 5-minute and we're trying to see what can we get. Are we going to get a break of the candle? Now, if you're looking at this, if you're actually looking at this, there is no high probability supply and demand set up on the 5-minute. You can't even see it. That's why I said, like, you got to look at other time frames too. This demand right here, you cannot see that on the 5-minute. You just think this is low probability. So let's wait. You give your stop loss more breathing room on the bigger supply. No, okay. So if you're strictly trading the 15-minute chart, like say if you just like fuck the 5-minute, let's just do the 15. I will put mine above candles because it's already a big stop loss off rip. Like we already filtered out the fake out move. I'm just gonna put it right above the candle. Like that's what I would do because we already given ourselves a big stop loss. I don't want to give it even more of a bigger stop loss. And now my first target is big as hell. So I'm gonna put it right above and below candles if I'm just strictly trading the 15-minute chart. Okay, so right here for this setup, we're waiting for it to break. It never closes the low of that candle. I mean, not closes, but wicks the low of that candle. I'm going to the 15-minute chart just so it can look like, you know what I'm saying? Make sure you're looking at both time frames. Okay, so we're waiting for the demand and we're still waiting for a break on the 5-minute. Okay. Do it break? No break. We're waiting for a break. No break yet. Boom. Now we'll be getting in right here. What's the topic of today? The topic of today is basically, it was 3 main questions that I got this week was how do I avoid fake outs? The 5-minute is moving way too fast. I mean, you can clearly just go on a higher time frame, but people was messaging me like, okay, the 5-minute, I'm missing setups. Like this is moving way too fast. I need to, what can I do? And I'm explaining like basically you need to go to the 15-minute chart if it's moving too fast for you. And how do I get a better RR? A lot of people just they like the one-on-ones not cutting it. And I understand like one-on-ones, like, no, like you want to want a higher RR. You got to wait for the 15-minute setups to happen. So right here, that would be your entry on a 5-minute. But if you look at the 15, look at where the break of the candle would have been. That don't even make sense. And we on NAS, that don't make sense. So that's why I say like, if you want a higher RR, wait for the 15-minute demand or supply to occur and then hop down to the 5-minute. But the 5-minute, give your trade some breathing room because it may be some fluctuation before it takes off. That's all I'm saying right here. So right here, that would be the break. And then this would be your entry right here. And then give it a little bit of breathing room. I'll probably put it underneath the zone. And then just the rest is just history after that. What is this? How much is this? That's a 1 or 2. Okay, that's cool. Anybody have any questions? Any questions as far as the 15-minute fake outs, anything? Because I was getting faked out like a motherfucker, I swear. That shit was irritating me. I'm not gonna lie. Anybody got any questions? No questions. Okay, so I'm gonna show you like 2 examples on NAS where it can literally just be this simple if you just strictly just focus on a 15-minute chart. I'm not gonna lie. So if there's a 15-minute setup, wait for the 5 minutes to get into the zone and wait for a break. Absolutely. Yep. Would you still use the 2-hour and 4-hour supply and demand for a confluence? The 2-hour, I don't use the 2-hour. I use the 4-hour and the 1-hour, but the 2-hour, no. Oh, you said the 1-hour. Oh yeah, absolutely. Just the same thing for swing traders. Anybody that want to swing, like this stuff still happens on a higher time frame. So if you want to just trade the daily and then go on a 4-hour, it's literally the same thing. So it's literally the same thing. You definitely need to give each stop loss and breathing room. Facts. How do you tackle stop losses when there's a giant wick? That is actually a good question. It depends on the scenario. Whatever the break of the candle is, now if you're breaking a candle have a wick on it itself, like a long wick, and then just break a candle, I don't know if I would take that because I'm still trying to put my stop loss above highs and lows, so that wouldn't even make sense. But right here, the gap in the market is laid right. I mean, not the gap, but the supply right here. All we're gonna do is just wait. Boom, and get into our zone. It's starting to break up. And then we just break. And then that'll be our sell right there. That'll literally be our sell. And my stop loss will literally be right here. It'll literally be right there. And then we get our 101, and then the rest is history. But that's just, honestly, I really feel like the 15-minute is just way more cleaner than a 5-minute. I think we all can agree to that, because we may get a sniper entry off the 5, but the 5 can be so messy sometimes. Will you scale into the 5-minute for this one right here? Let me see. Let me try to, because you got to make the box smaller once you get into another time frame. Okay, so for this setup right here, there is no gap to make it smaller. This one right here, this candle right here could have been basically like to adjust your zone, but it got filled in with that candle right there. So honestly, this will be your box, and you could definitely get in for a sale right here, right there, with that break. And then, but again, if you're taking a 5-minute entry, the break of the candle off the 5-minute, you got to give it a little bit of room. Like, you have to, because we just not sure. This is a good example, but in real time, you're not sure if they're just going to just extremely go away from that area. Like, we're not sure. So just give it just a couple pips. This is just a little bit of pips. If they stop you out and they keep going, then that just was a loser. But you definitely, if you taking 15 minutes supply and demand setups and you using a 5-minute breaks, give it just a little bit of room. Don't try to be hugging it, because it may stop you out before it going in your favor. So right here, this is the 5-minute break. That would be the 5-minute break. You in a little drawdown, and then it goes in your favor. And this is actually a super high RR right here. But are you going to sit through it? Like, people want high RR, but are you going to sit through it? That's the thing. Like, are you going to really sit through this? Like, this is a lot. This is a lot going on right here. This is a lot going on. You seem on fire today, bro. Love it. Oh no, I'm just in a good mood. I ain't gonna lie. What do you do if it taps with the 15-minute zone, but not the 5-minute zone? You take the 5-minute. If this setup right here don't have a 5-minute gap where you can adjust your zone, you're gonna have to take the 5-minute break. Or hold on, let me read that one more time. What do you do if it taps into the 15-minute zone, but not the 5-minute zone? Oh, take the break. Take the break. Just take the 5-minute break. Just take the 5-minute break. That's all you got to do. Because it's gonna be situations where, say hypothetically, right here, it's a 5-minute demand at that white line. If it don't reach up there, we're still basing it off of the 15-minute supply and demand. 5-minute break with stop loss with room, right? Yep, correct. Yep. Okay, so let's go to this next setup, because this is literally one that happened like literally the next day. Let me see. What is this? The 19th? Oh, this is the 18th. Okay. And this shit is dropping like a month. Okay. Okay. And this is a Wednesday, which is crazy. So what time is this? Because it's not 9 o'clock yet. Oh. Okay. Okay, this is shooting up. Okay, so this is 9:45. All right, so for people that would have took this setup right here, as far as just trading the New York Stock Exchange, you would have got a dub. This would have been a dub. But for people that's real conservative, that's not trading the New York Stock Exchange like me, I'm not taking this setup. And this is a Wednesday, probably not even trading this day. But okay, so right here, we're looking for, what are we looking for? If I'm looking at this right now, I don't see no supply and demand that haven't got tapped unless we're talking about these. And this one down here. So this is what I will be waiting for. I'll be waiting for this on the 15-minute chart. We're waiting on this on the 15-minute chart. Now, it taps into our zone. Okay, it breaks our zone. We delete our zone. It's that simple. Delete our zone. They don't care about it. Boom. It didn't hold. Let's see if it holds the next one. Boom. Touches into our zone. Breaks it. Now, this one right here, this could be an easy just a entry right there. Stop loss literally right here. You sitting in drawdown, you probably panicking, and then boom, it go in your favor. But let's see what it looks like on a 5 minute in this zone right here, because I don't really know what it's looking like. What is it looking like? Okay, right here. As soon as it touched that zone, that red candle right here, let me zoom in. This red candle right here, once it broke, that would have been the trigger right there. Boom. Now for this situation right here, I'm definitely putting my stop loss underneath the zone, because the zone is already small. That's why I like my zones to be smaller, because the bigger zones is more dangerous. The smaller zones are more safer. So this zone is already small. So I like this one. And my stop loss will literally be right up under here. You're sitting in some drawdown, and then it finally breaks. Now, look at where you would have got in at if you would have got in for as the 15-minute break. The 15-minute break is a little higher. The 5-minute break was right there. That's not really a big of a difference, but you just saving maybe, I don't know, like 3 pips or something. But let me read this question. So there's a 15-minute setup. Then the 5-minute go into the zone, but there is no high probability setup. Do we just wait for the break of the candle? Yes. Even look at this one. Look. This zone right here is the 15-minute zone, but look at the 5-minute. It already got tapped into. It literally already got tapped into. So we wouldn't even see this if we look strictly at the 5-minute. We wouldn't even see this. Like, okay, I don't even know why it's doing this right now. Like, you wouldn't even know why it's doing that. So let me go back to the 15-minute chart. Now it look cleaner. When it initially taps into the zone, if the next candle taps into it, does that make it the setup more likely to hold? What do you mean by if the next candle tap into it? We're just waiting for breaks. We're just waiting for the break of the candle. So if you have a 15-minute setup first, now then go to the 5-minute. Yeah. So say if you're just looking at the 15-minute, demand or supply. Once again to that zone, go to the 5-minute. Go to the 5-minute. Like, just to see like what is the price action going on the 5-minute. If no candles are breaking, then just don't take it. It's just that simple. Or if you want to just avoid fake outs, like I just said, just trade the 15-minute. Your stop loss is going to be bigger, but the fake outs is going to be less because it's just less noise. Yeah, where the candle entry specifically. Yeah. So right here, let me go back to the 5-minute. The 5-minute break will be right here at that smaller yellow line, and then this bigger, not yellow line, but white line. The bigger white line is the 15-minute break. The 15-minute break. You won't see the setup if you're just looking strictly at the 5-minute chart. You won't even notice this. So if the 15-minute high probability and 5-minute low probability, you can confident entering the 5-minute. Yes, absolutely. The 15-minute will hold way better than the 5-minute. It will. The higher time frame holds better. You can back test this on a 30-minute. You can back test this on a 1 hour, 4 hour. High probability gaps being filled to the demand and then breaking the candle. It's going to hold way better. It's going to hold way better. Hey, yo, the 5-minute demand, I got to feel instantly. Would you take that? What you talking about? The 5-minute demand. So for a 1 hour setup, we will wait until the 5-minute form, or we can enter on a break of the one. Yeah, it's literally so many ways. You can literally see a 1 hour setup, go to the 5-minute. I mean, not the 5-minute, go to the 15-minute for a break, or you can go to the 5-minute and wait for another setup to happen that's going to mimic the 1 hour. It's so many ways that you can like pick and choose which way you want to go into the market. But if you want to go on the 1 hour, go down to the 15-minute and see what it's doing. We can actually, like, we already know this is a winner. We can go to, let's just go, I don't know, we can go on Euro USD. It could be anything. It doesn't matter. We can literally go the 1 hour and 15 work good together. Yeah, that's what I was saying. So I'm going to find a setup on the 1 hour, and then let's just see what happens on the 15-minute. So, okay, so we got one right here. Boom. This is clear as day. And then we're going to replay and then go to the 15-minute and see if it's some bullshit going on the 15-minute. Okay, that would be the break right there. This will be a break off the 15-minute. Stop loss literally right here. And then the rest is history. I mean, this shit took forever, but it's going to be less fake outs. Yeah, this shit is volatile as hell, but it's going to be less fake outs. That's the main thing. Like, we're not trying to keep losing the win. Like that's getting irritating. I'm not going to lie. So if you want to filter out the 5-minute fake outs, go to the 15-minute chart for entries. Or if you want a better RR, on a lower time frames, definitely take the 15-minute supply and demand and then go to the 5-minute as far as entries. Okay, I hope I'm not confusing nobody on here. This week you called out GU a break of support. You called it out. What was that? Was that an example of a 5-minute or 15-minute entry? It was a trade you lost and you re-entered on. You talking about Thursday? What was that? Friday? You talking about Friday? Yesterday? I don't even know how to pronounce your name, bro. I don't know how to pronounce your name. No, I think it was 2 days ago. Okay, let's go to it. I'll DM you. Okay, yeah, send me the screenshot. But do everybody understand what I mean about scaling down? Just scaling down. If you want to take 1 hour setups, scale down to the 15-minute as far as breaks. You want to take 15 minutes setups, scale down to the 5-minute. And we're doing this just for better RRs because this is the 1 hour. This is the 1 hour. This is a lot of pips right here. So if you look at the 15-minute for our setup, then go to the 5-minute for our entry, it's still necessary to look at the 1 hour. Yeah, still look at the 1 hour. Yeah, definitely still look at the 1 hour, bro. Definitely. Because even right here, you're not going to see this. Let me see. Let's look at another 1 hour setup. I'm going to find another one. Let's see. Because let me see. Okay, right here. This is a 1 hour setup. So we're going to draw a box around this one. Draw a box around this. And let's just see what the 15-minute chart look like. Like, let's see if there's some fake outs going on. Okay, look. Now look at that. Now that you see that's a fake out right there. Breaking a candle, stop loss, boom, you lost. You lost. Is that something you lost? And then what it do? Then go in your favor. Can you avoid that? No. Even if you try to give it a bigger stop loss, it probably still would have got you. It's probably still would have got you. And we're not putting our stop loss down there. Hell no, I'm not doing that. The only thing I can say is for this type of setup, what time of day is it? This is London session. This is 3:45. The only thing I can say as far as this setup, because this is a 1 hour going down to the 15-minute chart, you can either wait for a liquidity grab, but is that always going to happen? It's just stuff that it's out of our control. Do we know it's going to be a liquidity grab? Do we know it's going to be a fake out? We do not know that. And especially with the 1 hour, this looks so clean on a 1 hour. This looked very clean on a 1 hour. We don't know if it's going to be a fake out move because if our break of the candle was a buy right there and then it stopped us out, we have to get back in. But we know that this setup right here is a higher time frame. So say if you do get stopped out on, you basically scale down. So basically, if you scale down to the 15-minute chart off of a 1 hour and you lose that first trigger, you need a better RR than just a 1 and 2. Straight up, like you need to hold that because this is a 1 hour setup. You know what I'm saying? So since this is a 1 hour setup, let's take this off. Let's put this back on. Since this is a 1 hour setup and we're going to scale down to the 15-minute chart and you lose that first trigger, you get in right here. You try to get the tightest stop loss as possible off of just losing that first time. And you try to get a way better RR than last time. Let's see if it's going to keep going up. I don't know if it did. That's a lot of patience right there. That is a lot of patience. But let's see what type of RR you would have got if you lost that first setup and then you would have took the setup again. It gave you almost a 1 to 4. It literally gave you almost a 1 to 4. So I would rather lose that first trigger, but my entry is based off the higher time frame. Hold the trade to get a better RR. You lost the 1 to 1. You literally lost the 1 to 1. Get back in, get a 1 to 2, 1 to 3. You covered your loss, and then you know what I'm saying? I hope that's making sense because like fake outs, like we don't know it's a fake out until we lose. How do you know it's going to be a fake out? Like I don't even be knowing. Like it's just like okay, I'm following my rules. Okay, it's a fake out. Boom, I need to get back in so I can make that money back and get a better RR. I hope this is making sense to people that's on here. Okay. So I don't really have any more examples. I just wanted to show like how do you increase your risk to reward? Because some people are okay, the one-on-ones is cool, like I'm winning, but at the same time, when I lose, it's canceling out the one-on-one. So you gotta wait for the higher time frame ones. That's the only way. That's literally the only way. What's the indicator that shows the days? It's called Matrix by Jessamine. It have like a bunch of like EMAs on it. I just took it all off. I can show you right now. So it's an indicator called Matrix by Jessamine, and it got like a bunch of like this is pointless ass EMAs. Take all that shit off, and I just keep like the days of the week, and then yeah, that's what I use. How do you set up your short and long position to find a one-on-one or better? How do you find your short or long position? Well, what do you mean by how I find it? I just wait for a high probability supply and demand to reach a zone and then just scale down. If I take a full hour, let me go to a full hour. So right here, if this is a 4 hour demand right here, then I'll scale down to the 1 hour. So we got a 4 hour demand right here, and it literally taps into it, and then I go to the 1 hour. What did the 1 hour do? Boom, they go a break right there. Now this is for your swing traders right here. This is literally for your swing traders. You take that break, you hold it, literally, you hold it. Your stop loss gonna be big, so you may have to decrease your lot size. But if that's a 4 hour demand right there, no, how do you set it up? Like what settings are your position tools set to for a one-on-one? Oh, you talking about the long and short position? This thing, Bree? I think that's what you're talking about. Oh, you just I just have mine set. This is my inputs. It usually just give me like one-on-one by default. I don't really know how I did that, but basically, the tick value, just make sure that the tick values are the same. And then you just like, it's like 400, and then that'll be more. And then if you want to, it's not going to always give me the exact one-to-one RR every single time. Doyle, at one-on-one, you close in 50%, and then runner. Yes, absolutely. If I enter twice, I'm closing one and I'm leaving the other position running. That's why I twin trade. People ask me, why do you twin trade all the time? I twin trade to decide if I want to leave a runner or not. I don't leave runners all the time, but that's why I twin trade all the time. How do you determine the breaker structure when initially coming to the market, as far as the macro and the micro? It's just top down analysis. Like start at the 4 hour. I mainly start at the 4 hour. I don't really look at the daily like that. I look at the daily, but I'm still trying to be in and out. So I look at the 4 hour, go to the 1 hour. Okay. Matter of fact, let's go to this 4 hour setup and let's just keep scaling down. Let's just keep scaling down all the way to the 5 minute. Right here. Let's see. So 4 hour, scale down to the 1 hour. We know that was the break. 15 minute. And look at that. This is the 4 hour demand, and then you mixed it with the 15-minute entry. So boom, that would have been your entry right there. Now that's a crazy RR. I'm not gonna lie. That's crazy. Now let's scale down all the way to the 5 minute on that same setup. Bro. And then what look what they did. That 4 hour demand was turned into a 5 minute demand. Right on it. You know what I'm saying? So if you got a 4 hour demand, keep scaling down once it's getting to your zone. Or you can literally wait. Literally. You can even do this. If you go on a higher time frame and you're still unsure on the first break of the candle, wait for the second break of the candle. Wait on the third, but we on a 5 minute though. So basically, this is a 4 hour demand. If you're still unsure or not confident to take that first break on the 5 minute, wait for like the second break or the third break. We're still getting a tight stop loss because this is a 4 hour setup. You ever trade a stop loss or just hold that break even? I'll trail it. I'll move my stop loss to break even, and then I'll come back in a few hours just to see where is it at, and then I'll just keep trailing it. But I won't babysit it. I just won't babysit it. If I leave a runner, I don't babysit. I don't babysit at all. If you find a high probability in 1 hour, would you take a break on a 5 minute, or is it too dangerous? Go to the 15 minute first. Check the 15 minute first. And if hold on, I'm getting distracted. Hold on. Does it have to touch? No, okay. So let me answer that question. So if it's a 1 hour setup with the gap, et cetera, and all of that, go to the 15-minute. If the 15-minute candle was too big, go to the 5-minute. We're trying to get the most snipers entry to get a better RR. That's what we're trying to do. So it just depends on how big is the candle, what is approaching at our zone. Because if it's too big, we need to scale down. It's just too large. I'm not trying to have no big ass stop loss. Does it have to touch the 5-minute in order to break? No. I mean, that's why I said it all depends on how you want to enter the market. Do you want to enter off the 15-minute breaks? Do you want to enter off of the 1 hour breaks and just swing trade it? Do you want to only take 4 hour demands? Like this is a 4 hour demand zone right here off the 5-minute. So do you want to wait for these beautiful setups, which is going to take forever, literally? But this is a trade, like this is damn near a trade of the year type shit. You know what I'm saying? Like, but it just depends on, are you patient enough to wait for higher time frame zones to be reached? Because those aren't going to happen every single day. Oh, I recommend what you said you was going to touch on this week. Oh, I already talked about that. I already talked about it. When I upload this onto the Discord, you're going to see. But basically, just the VIX is just a fear meter. Okay, how if it's going higher, people are getting uncomfortable. People are probably getting their stocks out because it's getting very volatile. If it's getting lower, people are calm. People are holding their position. That's all that really is. So if the VIX is going down, NAS is going to go up. SPX is going to go up. And if the VIX is going up, NAS is probably going to be dropping. SPX is probably going to be dropping. You know what I'm saying? All right, anybody have any questions, though? Because I don't got, that's all I got for us today as far as higher RR. Because I know some of y'all are like, man, one-on-one's cool. I just need a higher RR, especially for everybody that's taking challenges, bro. You got to get a higher RR. Like the one-on-ones is cool, but you definitely want to get the higher RR so you can just pass a challenge. Get a 1 to 3 RR, risk 2%, that's 6%. It's just that simple. So you need to, like, I recommend anybody that's taking challenges, wait for 1 hour setups or 4 hour setups so you can get the best, or even wait for 15-minute setups. Scale down so you can get a way better than 1-on-1 RR. You're going to get that off rip. You're going to get that. Can you zoom in on the 15-minute demand? I got a question, okay? Have you adjusted your watch list at all? No, but if I start calling out setups on the 15-minute chart, I'm going to have to add more pairs because we're going to be waiting days because the 15 minutes is not going to always have setups. So if I do add some pairs, that means I am trading 15-minute supply and demand setups. Hover over the second green candle right here. This one right here. If you pass and get a 100K challenge, what percent would you risk per day per trade? I'll risk 1% or a 0.5% because like one of my boys that's on here right now, he just told me a lot of people are getting their challenge, but they're losing it, and they're not even making it to the next payout. The goal of prop firms is just make it to the next payout. Like that's really it. Like we're trying to get paid out every single month, so you can't be risking heavy every single time if you're trying to keep the account. That's what happens. People get the account, they're passed, but then they're risking so much that when they lose, you're about to lose the account. You know what I'm saying? Like you got to be really conservative and be picky on your setups. Yeah. So if there was a wick that tapped in the zone, would you answer off that demand, off of the 5-minute demand, or off of the 4 hour demand? Which one you talking about? I don't know which one you're talking about. To be honest, when you get the account, try to get yourself some breathing room. Yeah, absolutely. The 5-minute? No, okay. So for this situation right here, this is a 5-minute demand, and then we got a 4 hour demand that just previously just getting tapped into. I'm entering off of the breakout of this candle right here. Not gonna lie, like I am. Can you do a short simulation of how you specifically place a runner? Okay. Let's do another setup because we clearly know this is like the most ideal. So let's just go find something else. Let's go on a pair that I won't even trade. Let's I don't know. Okay, let's okay, euro this one. I don't ever trade this. I don't ever trade this. So let's see. Matter of fact, let's go to a 1 hour. This makes so much sense. I'm messing up when I scale down because I'm waiting for the 5-minute high probability setup perform and just taking a break. I was getting so frustrated. Facts. Gotta have discipline and taking the chance. I need my magic keys working first. No fight, man. Get magic keys, man. Get magic keys. Okay, so right here. Right here. We have a 1 hour supply right here. Taps into our zone. Let's see what happens on the 15-minute chart. The 15-minute chart give us, I don't even know nothing about this pair because I don't trade it at all. How much is this? Okay, this is like 13 pips. Okay, so first type of entry, you can just trade the regular 15-minute break. If you want to keep it just super simple, just take the 15-minute break, boom. Stop loss will literally be right here. Because 15 minutes, I'm putting mine above candles because we already on the 15 minutes. So the first take profit, you feel me? Like that's already big. Now let's see what it looked like on the 5 minute. On a 5 minute. Now if we're looking at this zone, you don't see anything. On the 15 minute, I don't know. We're gonna see if the 5 minute have a gap, but on the 15 minute, there is no gap. We don't see anything. So let me go to the 5 minute. We'll go to the 5 minute. What do we see? Okay, I think we have a gap, and we do. So the 5 minute get adjusted right there. That's why you have to master gaps. Anybody that's on here that don't know about gaps, you need to master it, or I don't know, like you got to really understand gaps, and you'll know why I just did that. So I just adjust my zone, and then look. Now look at your entry. That's crazy. I ain't gonna lie. Your entry, hold on, let me go back. This is the 15-minute break. You took the 5 minute break, and now you getting in up here. That's way better. That's way better. Now let's go back to the 1 hour because this is initially a 1 hour setup. That's an easy 1 to 2, 1 to 3. And then let's look and see where the gaps are at. There is no gaps right here at this very moment right here. But this is probably 4 hour gaps. But you getting in way higher off of just a 4 hour, because remember, we started with this 4 hour supply right here, and then we just adjusted it. We just adjusted it to the 5 minute. Let me zoom in right here. Okay, right there. And if you don't understand, let me stretch out these candles. When they first left that area, did they ever pull back into that zone? No, they didn't. They just kept going. I can stretch it out even more. That red candle blasted out of there. If this red candle would have tapped back into it, I wouldn't have adjusted my zone. I would never did that. So since it never did that, I'm leaving it adjusted just like that. And this is a pair that I've never traded ever in my life. Let's go back. Okay, right here. Okay. And let's see. Let's go back to the 15-minute chart. And let's fast forward. And remember, this is a 1 hour setup. So like if you add a 1 hour setup, you need to hold this. Like without a doubt, you need to hold it. You have to hold it. Like this is like if you're taking higher time frame setups, don't just, you're gonna get the 1-on-1. Like that's a given. You're gonna get that. Like you're gonna get that. So we shouldn't even be considering 1-on-1s if we're scaling down. If you're taking higher time frame setups, don't just be complacent with the 1-on-1. Like we're gonna get that like off rip. So you need to get you need to have some patience and have some type of long-term target, like straight up long-term target off rip. So this, what is this, a 1 to 4 off the 5 minute break right here? We getting in all the way up. We're getting at the best possible entry right here. So yeah, that's basically what this webinar was about, man. Like people want y'all want the higher RRs, bro. You gotta wait to the higher time frames. Where will be your target? Okay, if I get in for this setup right here, and mind you, the EMAs did not help you in this situation. Please don't base stuff off of EMAs. It's not going to help you. Like we're getting in at the best possible price without EMAs. So if you get in for a sale right here, and I'm looking for a target, my first target is I always got to go for as liquidity right here. So let me zoom in. This right here, those lows right there, that's my first target. That's my first target. So after that, you know what I'm saying, we're definitely in profit. Now I'll move my stop loss to break even. That's my first target. My second target will have to be one of these swing lows. I'm not gonna lie, one of these swing lows, one of them. But I'm again, you need to be trailing at this point. Like if you're all the way down here, you need to be trailing your stop loss. Like it's not even no point to just like, okay, maybe you can go. Let's see what it look like if we go on a 1 hour. If we're going on 1 hour. Oh man, this is crazy. I would probably just get out at this swing low. Again, we don't know that this is going to be an explosive move like this. And what time of day is this? This is actually London session. That's crazy. That's crazy. So this drop happened and then it kept going all the way through New York. Crazy. London again. Look, Ayana, like, so you need to be trading London, man. Bro, I'm on the East Coast. I'm on the East Coast. I can't do that. But yeah, so like that's what I would do. That's literally what I would do. 1 hour plays are basically swing trades. Facts. 15-minute break or 5-minute break. This depends on what you're comfortable with. It just depends. It just depends, man. But don't be afraid. But this is the thing. If you're taking a higher time frame setup, 4 hour or 1 hour, don't be afraid to lose before you win, because you know that this specific setup is based off the higher time frame. So when you do get in profit and it's starting to run, you're going to make your money back and some. When we take our 5-minute setups and we lose, that's not based off the higher time frame. That's based off of a 5-minute setup happening. You get what I'm saying? Like, it's a difference between taking just a 5-minute entry and that's based off of a 5-minute setup versus a 5-minute entry and we off of a 15-minute, 1 hour, or 4 hour setup. You get what I'm saying? So if you want the higher RRs for the last time, you gotta base it off the higher time frames: 15-minute, 1 hour, or 4 hour. The daily, you're gonna be waiting days, and I don't trade like that. I don't trade like that. So any last questions, man? We got like 9 minutes. I hope this helps somebody understand that you don't have to always go to one-on-ones. It's because I do that and I'm a scalper. You don't have to do that. You literally don't have to do that. Like, you know what I'm saying? And next week, I may start calling out 15-minute setups over 5-minute setups. No cap. Well, I will recommend waiting for pullbacks and break of structure when trailing stop loss. Yeah, for sure. For sure. Wait until structure being broken and then just move your stop loss right above that high. So basically, say if I did get in right here, as far as that sell, once I see structure being broken, like this one being broken, my stop loss will go right here. Okay, we get more structure being broken right here. My stop loss will be up here, and vice versa until it just finally just stops us out. Are you going to be calling these type of setups next week? 15 minutes on? Yeah, I may do that. Yeah, I may do 15-minute. The 1 hour, they may not happen in New York. That's the thing. The 1 hours, they may not happen in New York. It just may not happen. So, you know what I'm saying? Like, I don't want everybody just have they phone on standby and then just placing trades. That's not cool, because I don't even do that. So like, it just depends on what I see in New York session. If I don't see a 15-minute setup or a 1 hour setup in New York session, then it just have to be a 5-minute. If you see a setup and it tapped into your zone immediately, or would you rather wait for it to enter? Would you rather take it later? Take it later in the zone. What is it based off of? Is it based off of 5-minute setup, 15-minute setup, 1 hour setup? It just depends. A 5-minute setup. Let's just go back to the 5-minute and let's just see. Let me take this off. Find any real quick. Yeah, I'm about to say I'm gonna find just a 15-minute setup real quick. This pair is trash, and I don't even think this really moved that much in New York. Let's try London. Or do it. Anybody trade this shit? Okay, let me see. Right here, this is a demand right here. Off the 50 SMA. Now, what was the question again? Because this is just a 5-minute setup right here. Because this would just be a regular break. Like, this would be a regular break. Let me I'm gonna go to the higher time frame just to see. Okay, so on now look at this. There is no 15-minute demand. You don't see a 15-minute demand. Let's go to the 1 hour. What is the 1 hour doing? Actually, this is a 1 hour. Now that's crazy. this is actually a 1 hour demand. Let me fast forward right here. I mean, rewind. If you're looking at this, this is actually a 1 hour demand at this very moment. Let's go back to the 15. Nothing on the 15. But then we get this. Now, this is a 1 hour demand. We're scaling down. We're just scaling down. We don't see none on the 15 minute. We go to the 5 minute. Okay, I see something. Let me adjust my zone. Boom, our zone turns into this. And then I would take that. So this is still, let me replay that. Let me replay that because I feel like some of y'all missed that. This is a 1 hour demand right here. We can't see it. Let's go back to the 1 hour. At this very moment, this is a 1 hour demand. You cannot see that. You go to the 15-minute chart, scaling down. This not looking clear. This don't make sense. And then you go to the 5 minute. Oh, okay. I got a gap right here. We're just scaling down. We're scaling down until we see gaps. That's all we're doing. Okay, 15, no gap. 5 minute gap. Okay, boom. I'm gonna just adjust my zone so I can have a more sniper entry. Boom. That'll be our zone right there. And then you just wait for it to tap into your zone, and then the rest is history. But this is a 1 hour setup, though. So that's probably why this had a big explosion like this, because this is a 1 hour setup rather than just a simply 5 minute setup. You get what I'm saying? I hope this making sense. I hope this making sense. I hope. But yeah, that's all I got, man. I hope this helps somebody. Next week, if y'all got any questions or whatever y'all want to go through over next week webinar, just let me know. But I don't got anything else. Can you quickly show us how to program Magic Keys? Why y'all don't never I think Magic Keys just have a terrible customer service, because y'all keep saying like the programming on Magic Keys. What are you trading? Ayana, what are you trading? They trash. Yeah, I heard they trash. You trade NAS. Where my man's at? I think it's on the general chat. Like the tick value. You gotta change the tick value. I can't even set it up for a Mac. I don't even have Mac. I don't have Mac, so I do the Windows. But all you gotta do is just change the tick value. You gotta put your tick value to 1. Exactly. It's all you gotta do is go in the general chat, go to the pinned messages, and he literally made a short video of how he did it. I didn't figure it out. I was only using Forex pair as far as Magic Keys until he showed me. He literally was like, bro, this is how you do it. I'm like, okay. Yeah, it's 1 tick value, not negative. Can you show us the settings real quick for us to make the adjustment? I mean, just take off all the EMAs, take off all it, because it's gonna be a bunch of messy bullshit. Take off all that stuff and just keep the days of the week. That's it. That's literally take everything off and just keep the days of the week. That's it. All right. Anybody got any questions? You can just message me in the Discord. And yeah, man, let's have a good week, man. Next week, again, if I start calling out 15-minute setups, understand we're gonna be sitting in that for a little minute. Facts. We're gonna be sitting in that for a good minute. So it's not just gonna be just a one-on-one. It's gonna be, you feel me? Gonna be sitting in that for a little minute. So if you got any questions, just you can DM me, and then we can go from there, man. Y'all have a good weekend, man. Let's have a good week next week, man. Don't get discouraged, bro. If you're like struggling, not understanding gaps. That's why I said if you're having a hard time understanding gaps, understanding market structure, understanding supply and demand, just message me, man. Just message me. That's it. Just message me. All right, y'all have a good weekend.